Winners never quit, and quitters never win. Hi, I'm Dean Gallagher, and it's an infamous quote from Vince Lombardi. While this saying is true in some cases, it certainly is not 100% of the time. And there are plenty of situations where the winner's answer will be to quit. The fact is, in trading, you absolutely must know when and how to quit. In other words, you must master exit strategies in order to win in the long term. Sure, you still need an entry point, a money management system, and a good general trading knowledge, but without the right exit strategy, that's a sure way to financial suicide. In this video, we'll cover 5 different strategies, which we call the 5 exit heroes, which I and my trading partner Thomas Heist are using every day in our trading to accurately pinpoint our exits. When you've finished watching this training, you'll be able to trade more confidently, knowing that your back is always covered by these 5 heroes. As you've already known, when it comes to trading Forex, exiting the trade is essential and crucial. Sure, you need an entry point, a money management system, and a good general trading knowledge, but without the right exit strategy, you may be leaving a lot of money on the table. These 5 exit heroes will help you to exit your trade at the right time. There are a few ways to choose your take profits, and each has their own unique advantages and disadvantages. Although there exists a variety of ways to choose profit targets, many traders do not understand how to make accurate price projections. As such, a proper exit strategy is needed. As an example, some traders use oscillators to enter their trades. When applying oscillators, the trader would then follow the oscillator till it reaches an overbought area and then decide to sell. On the flip side, they would buy when an oscillator reaches an oversold level. But by using oscillators, they cannot determine price ranges, and as such, they have no idea when to exit the trades. Here are some important concepts when you're developing exit strategies that really work. Support and resistance, price pattern target measurement, Fibonacci extensions, trend line channels, floor trader pivots. In this video, we'll cover all 5 of the strategies listed above, which we've named the 5 exit heroes. Our intention here isn't to tell you take profit at this point. Rather, we want to give you ideas on how to create the best exit strategies for your trading systems and trading style. The first exit hero, support and resistance. It is the simplest for newcomers. It's simply using the nearest support resistance areas as the targets for taking profits. This is one of the most common of all the profit targets, since support and resistance are easy to find on the charts. The advantage to using support resistance to determine profit targets is that it's quite simple. You simply fire up any chart and draw your support and resistance lines. The disadvantage in this case is that the method doesn't work if you're trading breakouts or trends that have beaten the support resistance levels. In fact, this system is best suited to those who also use support resistance as part of how they determine their entry points. In that case, you would enter when the currency pair bounced off a support and/or resistance, and then exit when it hit the next resistance or support. Having said that, support and resistance levels can be used to determine exit points on any trade, assuming that the currency pair is within the range where it has previously been. To use this method, you would, number 1, look at the next time frame chart above what you are trading. If you're trading a 1-hour chart, chart the support resistance on the 4-hour. Number 2, chart the long-term support and resistance levels. Number 3, use those as your profit targets for your trade. It's also suggested that you chart the major minor support and resistance levels on several other charts. Knowing where these levels are on the longer and shorter term charts will help ensure that you're able to watch that long trade as it nears a minor resistance from another time frame, and in turn be able to exit if things turn around. The second exit hero, profit target measurement. Although it takes more experience to identify them, price patterns can be used as an exit strategy. In this case, the patterns are used to create a profit target measurement by looking at what has happened and attempting to determine what will happen. There are many different types of price patterns. Some examples include rectangles, triangles, wedges, pennants or price flags, double tops, double bottoms, and others. There are actually a number of ways to use price patterns to your advantage. As an example, double tops or bottoms can be used to determine more than just entry points. They can give you an excellent place to exit the trade. Looking at the chart on the next page, you can see the double bottom we've shown, and there's also a double top. It's quite simple to calculate that there are approximately 250 pips between the double top and the double bottom, and then use that as a profit target. Likewise, other price patterns may be used to determine when the most appropriate time to exit the trade is. The third exit hero, Fibonacci extensions. Another excellent way to manage your trades entirely and set take profits that move with the trade is by using Fibonacci extensions. By using this method to create your take profit level, you not only can find a target, but you can use the Fibonacci to move your target if the trade continues in your favor. Take a look at the chart below. In Forex, when you use Fibonacci charts, you'll find that currencies often bounce at the 38%, 50%, 61.8%, 78.6%, 100%, 127%, etc. levels. Looking at the chart above, you can see that the currency pair bounces between 50% and 23% a number of times before continuing on to an extension. The fact that the currency's price tends to bounce on Fibonacci lines makes it simple to use these points as an exit strategy. You can enter your trade with the profit target of 78.6% and then move your target when the price moves past that point. Assuming it didn't bounce at 78.6%, you may set your next profit level to 100% and then move to 127% as the price moves through that point. You can also use the Fibonacci extensions to manage your stops and protect your profits as the trade moves in your favor. Another way to use Fibonacci to manage take profit levels is with Fibonacci fans. This is slightly more complicated, so we won't cover it in detail, but it has the advantage of showing Fibonacci ratios that move with your trade. You'll find that the price in any uptrend or downtrend often falls between any two lines of the ratios on the fan. Once the price moves outside of those two levels, the trend is usually over, and it's time to exit. Of course, if it moves in your favor, it's likely a breakout, and you should draw a new Fibonacci fan to profit from it. The fourth exit hero, trendline channels. When channels form within a trend, they can also make excellent exit points. They also work well for entries. This idea follows along the same lines as the Fibonacci fan idea we shared earlier, but in this case, we're using trend lines instead of a fan. Take a look at the chart below with a trendline channel drawn. Looking at the trend lines drawn above, it becomes clear how simple this tool is to use to determine exit points. If you're in a trade where the price is currently between two trend lines, your profit target should be the trend line itself. When these types of channels form, you'll find that most of the time the price will bounce between the lines and will likely continue to do so until something happens to change the price, i.e. a news release, a major support, resistance level, etc. This can make trendline channels an excellent trading tool in general. You can ride the trend both ways and profit from the up and down movement between channels. It should be noted here that trendline channels are similar to using support and resistance levels to find your profit targets. In this case, though, the support resistance moves with the trend, which it usually does.